Good morning, traders. It is 8:02 a.m. Chicago time on Thursday, the 5th of October, 2023. This is episode number 2551. Thanks for coming in today. I want to remind you that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Um, Also, a reminder that none of what I'm telling you is a trade recommendation. Just use this for your own planning and education purposes only. This morning, we're seeing a market that is basically mixed. Um, we're seeing the indices lower by a little bit versus settlement. We're seeing Euro Stocks 50 flat. We're seeing the DAX flat. We're seeing silver higher again, looks like, or is that stuck? And then we're seeing volume in the S&P is quite high again, 257,000 contracts, 257,000 contracts in the S&P versus what we would consider to be normal around 170,000. So still pretty heavy volume. Still pretty heavy volume, and it's and we're selling off here a little bit. So that's where we stand in our overall perspective. Looking at what the impacts of today, we did have ConAgra report before the markets today. They beat by about 10%. Constellation Brands as well came in better by about 10%. And then Lamb Western Holdings, Levi Strauss is expected after the close, the jeans company. And that's it. Other news. We saw balance trade out of Germany came out stronger this morning. Sorry, my voice is kind of crackly this morning. And then, more importantly, initial claims came in pretty hot again, 207,000 versus 210,000, and continuing claims for not last week but the week before for 1.664 million versus 1.675 expected. We have a lot on deck today to be aware of. Fed's Mester speaking currently. ECB's Windows at 10. We get the gas inventories at 10:30. Fed's barking at 11:30. We have a 4 and 8 week bill auction at 11:30 as well. Fed's daily at 12. Fed's bar at 12:15. So you got the Fed parade again, and that's what we have. So let's take a look at the markets. We don't have a pre-market summary sheet anymore for me to show, so I have to display something, and I heard a lot of whining about this yesterday. So so I'm not showing this. So here's where we stand. Now, the range today for the ES is only 24.75 points or so. 25 points. That's pretty much in line. Pretty much in line with expectations. The thing to note is that the yields, especially the 10-year, is driving things currently. The date is wrong. I appreciate that. Thank you. A lot going on this morning. Let's fix that so it's not confusing. That's been fixed. Appreciate that. If you refresh, it'll be correct. So yields, climbing, futures on the 10 and 30 climbing higher yesterday, lower yields, and we're rolling over right off of the current month's VWAP, which is only a couple days old. And then we had a nice little rally yesterday. We can kind of see that rally coming on. We pushed against some key areas. We talked about that yesterday. I'm not going to get into that too much. Crude, just wow, boom. Crude. We have been talking a lot about crude lately. And if you recall, when it was When it was in a consolidation, I talked about it very, very likely pushing down 87.50. And then the equilibrium point now for crude, now that we gave up 90.50 up here, the equilibrium point for crude is 80. 80 is the sweet spot long term, in my opinion. So let's see what the ES has done. Let's back it up a little bit. Yesterday, we had an inside day. We basically, you could see the rotations. These are 30-minute TPOs. You could see the rotations. You know, we open, we extend down on B bracket right here. Then C bracket is on the inside, and then D bracket, this bracket here got us looking long, range extension above the IB. And then it looked like remember I said, you know, the 84 area is going to be, did I say 84 or 82? The 82 area is going to be crucial. If we take out the 82, we're very, very likely to go up. The single prints that were left behind from Tuesday. And what it did is it kind of started filling them in. Pretty good here. And then it fell right back to the open and the prior day's point of control right in here, almost the settlement, before it came back in, and on the close, it closed those single prints. Just a tough way to do it. It's just really, really tough to hold on. I mean, we had a very clear break higher on D bracket. So A, B bracket right here, C bracket, D bracket showed us that, you know, we had a range extension up and it started to fill in the single prints, and then it came all the way back to these references, the open, the full session VWAP, the RTH VWAP, RTH mid, just a mess in here, and then suddenly it throttled up into the close, and it ended up closing out the single prints back to 4,300, pokes through 4,300 into 4,304 to finish at 4,297. And then the overnight session tests down, lower high, lower low, lower high, lower low. So it's establishing a channel in this way, even with the European Open, breaks the channel, consolidates, and then retests the high, and it pokes the prior week high. This is a pretty weak high overnight. Pokes it by a couple ticks, and then it explodes to the downside on the 730 numbers, which came in right here. And you could see since then there's been a cloud of large lots, large dots, in this case defined at 100 lots or better. And then since then, what we have is the market being on top of the overnight point of control, which if you look at the overnight profile, we'll expand that a little bit to look at a little bit better. The overnight point of controls here, full session mid, full session VWAP just above us in the 4289 area. And so we're in this compressed area inside of yesterday's range. Yesterday is a multi-distribution price discovery profile. Technically, yesterday is a normal variation day where better than 18 or 15% of the range extends beyond the IB, but it didn't double or triple the IB, so it's not quite trend, even though it finished at the upper end. This is a normal variation day. These are common. This morning, what we see is that the market is just tired. It's just tired. And so as we bring it in here, we have this kind of multi-distribution profile. We've got us an ogre with slick hair here. And of course, always smoking either Marlboros or blunts, depending on your taste and whether or not if it's legal in your state or country. Multi-distribution profile, whenever we get one of these smoking guys, it just means that we have active price discovery. It's a joke. Don't take it too seriously. Don't get upset. We're talking about weed. Um, it means it's a multi-distribution profile, and it means there's active price discovery. You could see top of range, bottom of range, new bottom to top of range, top of range to bottom of range, not a new bottom. This is completely balanced here. If you look at the delta is telling us that the market is balanced as well. There's V large lots below, large lots above, small lots in the middle, cumulative delta in the middle. There's no real push in either direction. We saw pretty good rotation, the zigzag rotation here on this drop. This was an impulse down, pullback continuation, right? But the continuation is so terribly weak. And then the reversal actually starts to expand a little bit and starts to get on the edge of an impulse. So this is noise. This is noise. And overall, I'm just a little bit concerned about how this is playing out this morning. Now, the volume is pretty high, but it's lower than what it was yesterday or the day before. Again, we have made our way to 5,300 yesterday. We tested 5,300 from our 40 to 30 MC point of control. Our MC point of control. We went all the way down into that big micro composite, tested the point of control 42.30. We missed it by, what is it, 4 or 5 points. And then it started to, and then it turned all the way up. So to me, it just looks like this is done on the downside. It is checked. Let's take a look at that. This is your TPO detail. Oh, okay. I was gonna say, man, this does not look familiar. So let's look at that. Here it is. We're gonna compress this. So you can see this monster profile here from the middle of April all the way through to early June. This is what's called a microcomposite, an MC. This is a composite or a combination of a bunch of days so that we can see when days overlap each other. I'll show you an example of this because you're asking, and I know you're possibly new here. But let's look at this. See these profiles here in the RTY? This is balance. This profile overlaps that one. This one overlaps that one. 2 points of control on top of each other. This one overlaps that one. You can see the value area. The blue part is inside of this one, and then it's starting to break away. But really, it didn't. It's the balance stops here, but this is inside of that. So all of these end up being together. So what we do, in order to see, we don't really care anymore because the points of control and the value areas overlap each other. We don't really care about individual day points of control or value areas. We start to compress these into each other. So we merge with previous, merge with previous, merge with previous. Every day that's inside of that range gets put together into a profile. And you can see this day here, this was Monday, still, even though it opened and broke down, it's actually moved away from the point of control. And what you see here is one time framing down with potential bounce. So what the RTY has to do is it has to come back and trade up here for this to be a new MC. So this MC now tells us that, hey, the overall picture, the overall balance for where the market was accepting prices is in the RTYs at $1,820, $1,800.20. So this is going to be an important reference for when the RTY comes back, this becomes an important balance price that it's likely to test. That's what an MC is, and we have a huge one down here from April through May, and we have walked ourselves down into it, and that price is down here at 42.30, right? So we pushed into that MC. We pushed down into it at 35 in the overnight session. That doesn't really count. And then since then, we've kind of had an inside day. So guess what? We're going to merge yesterday with the day before. Boom. New MC. Okay. This new MC shows us that a TPO point of control is at 42.75 and a volume point of control down below right here at 42.61. So the question becomes, we don't know which it'll respect. The question becomes, okay, we had an inside day yesterday to the day before. We are opening inside of that range. We have a value area here. We have a B-shaped profile with a value area. We're opening on the edge of that value area. Do we fall? And that's what we have to observe today, being that the overnight session is balanced, right? It's trading right on top of the overnight point of control, trading right below the full session VWAP, full session mid, right? Those are key references. Does it fall back in? And if it falls back in, this becomes your first target. The volume POC becomes your second target. And if it doesn't hold this for a bounce, or it doesn't hold this for a bounce, then the expectation is that low is likely to be gone. And then we're looking for 42.50, okay? And then 42.30 beneath there again. Okay, so what this market is doing is it's showing some exhaustion on the sell side with yesterday's action. Let's go back to a daily TPO instead of one that's combined. We could see that yesterday it really struggled at the low. It struggled to push to continue to gain. So sellers were not able to continuously gain ground to the short side. It's just telling us that they're getting exhausted. And then as soon as it breaks the prior buyer's high and has what's called range extension up, which is a high plus 3 ticks in ES, then we start to look for the market potentially testing the other side. And if it's testing the other side, that limit, like we talked about yesterday, is going to be 98. So the target of any push through 82 yesterday that we discussed, I don't want to play yesterday's video back for you. The target from yesterday, if it took the 82, is 98. But again, as I said, this kind of game here where it pushed back to the open was a shakeout before it started pushing higher. What the ES is trying to do is it's trying to get back to its most important resting place or balance right here of 43.15. Another day of beautiful typing with a mouse. So this is where we stand. We're clearing this former 42.95. We were clearing it yesterday. We finished above it. It really sets us up. If I didn't see what the overnight was doing, I would say it's very, very likely to drift and finish the auction up to 43.15. But because of what it did overnight and that it tested higher, then it made a higher high by a couple ticks and it went to the other side of the range, went to 42.77 and a quarter, and now we're at 42.85. La 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 la. And it's filling this area in. It's filling in the low volume node, and that to me means that we're likely to have a noisy open. So the conclusion here is that the open today is one where we are likely to want to sit and wait and see what happens. We have these Fed speakers lined up and stuff, but I don't see anything scheduled that's going to be changing the perspective dramatically. But at the end of the day, here's the line in the sand remains this 82 area. And you can see the overnight low is just above where the last impulse low was before we pushed all the way back into the 4400s before this drop. And we're holding that low here. So there are indications. What this is saying is there are indications that buyers are stepping in. There are a lot more indications that sellers are actually getting exhausted. They're not able to move price lower. And so when sellers get exhausted, what do? What do? They buy. They cover. Right? You're going to cover some of your risk, even though you have a short bias. When things slow down, you're probably going to cover, so you become a buyer. And so with that dynamic, what you're likely to end up with is a Gaussian or a fat multi-distribution profile sitting in the middle here between this big area above and this point of control from yesterday, 42.75, and potentially the MC point of control we just created with these 2 days. You're probably going to sit between 42.75 and 42.60 down here, right? So this is the kind of range we're likely to play in, and that's a pretty good range. It's 55 points. 40 to 55 points is what we've got here. So I'm expecting this to be a churning day. And guess what? Tomorrow, non-farm payrolls. Non-farm payrolls and the U.S. unemployment number, non-farm payrolls are expected at 170,000. 170,000 consensus. The prior is 187,000. Unemployment rate expected to tick down to 3.7 from 3.8, and hourly earnings are expected to tick up to 0.3% versus 0.2. Participation rate is expected to stay steady at 62.8, 62.9. And so today may be a churn day. And if you look at the VIX, it's kind of saying that as well. Right? We'll look at the yields and the VIX. It's kind of saying that it started to climb up on the sell-off as we would expect. The value of puts is going to increase versus the value of calls. And then yesterday it fell off here as we rallied. The VIX comes off as we rally, and then so far it's just kind of been sideways. So to me, it just this is again one of those days where it's important to be patient, and it's important for the market to almost reach out through the screen and slap you across the face. That's how obvious a trade or a setup should be within your plan to participate. That's the kind of day we have. So NQ, same kind of story, except the NQ maintained the low that it put in September. So we have not breached the September low here, and we had an inside day. Yesterday, it filled in its single prints. The NQ is performing a lot better. The NQ, to me, seems to have better support for a push. Very likely that the NQ will reverse up. Before the ES, in my opinion. The NQ is very likely to turn up and re-tackle the 15.050, 15.060 and start working on the gap up here before the ES does. The NQ just has a more positive tilt on a relative basis. If you overlay the ES and the NQ on top of each other, you'll see that the profiles indicate this, and so does the price action. Crude oil, man, oh man, oh man. Crude is just great. Like it's just very exciting in terms of the action that we're seeing here with crude. Let me shift these up with the roll. Crude, remember, went into this kind of sideways consolidation. They popped to 94, fell through. Then we talked about, okay, it's poking to the downside, went to 88. So we tested this this area over here, and then we bounced back up. And then yesterday it opened in a gap, and it had a gap and go below 87.50, which is our key figure. And then the expectation is it's very likely to get into this 85 area to retest before the next decision is made, and it just rammed right through. I mean, all of a sudden, crude is a runner. Look at how poor its profile looks. It's just so bad. This structure coming on the way up in crude has been so poor that crude can just rip through it. Crude's key balance for the year, 80. That's the price. That's the magic price. Okay. We're out of time. Good luck this morning. And, as I said, keep your powder dry. Just take it easy. Wait for the market to really scream out that it's got a winner. It's got somebody who's in control before stepping in. There's no sense in betting your money out there on something that has even odds. Good luck.